Hello, namaskar viewers. I'm Sanjeev Pandya welcoming you to this week's episode of the Money Talk. Money Talk with AJ right here on ITV Gold. The show is sponsored by Sai CPA Services, a full-fledged professional accounting firm located in the state of New Jersey. Multiple locations in New Jersey, but they can assist you wherever you are in the states with any tax matters, any IRS audit-related matters. Their on-hand experience and knowledgeable CPAs will guide you and navigate you in the right direction. So for any tax matters, whether you have filed the taxes, whether you have not filed the taxes, or even if you have filed the tax return and not sure about who should be doing your taxes, well, this is the time you should contact Sai CPA Services. 908-888-8900 is the number, 908-888-8900, or visit their website, saicpaservices.com. They believe in doing taxes right. Refund, no refund, that's a different thing, but to do your taxes right, visit Sai CPA Services, one of the most accredited and one of the most highly rated CPA firms. That's a Sai CPA Services. With that note, I'd like to welcome Mr. AJ Kumar of Sai CPA Services. He is a CPA, CBA, and MBA with Sai CPA Services, and with over 25 years of experience in the taxes and the business and the management. He joins us every week in the show to guide us, to inform us, and to educate us about the taxes and money matters and everything else. This is the Money Talk, this week's episode. AJ, good to have you in the show.
Absolutely, Sanjay. Thank you for the kind introduction.
You're very welcome. And ladies and gentlemen, I want to let you know that Sai CPA Services, during the year, they hold very educational seminars in the different parts of the state, just to educate people about taxes, just to let them know that what are the changes in the taxes, or update them about taxes, because taxes can be very complicated. And as you know, IRS always comes up with something, and that's why somebody should be educated. Somebody should be doing that. So in light of their upcoming educational seminar on July 29th at ITV Gold Auditorium on Oak Tree Road in Edison, that's where they're going to have this seminar. You can be part of that, and you can visit saicpaservices.com for more information. Once you're part of that, you'll come to know a lot more. You'll come to know a lot more about taxes, as well as you will get a chance to meet AJ and the team of Sai CPA Services. And this seminar is going to be extremely important, and more importantly, it will be worth for you to be there with your friends and business partners. Be there. It's going to be very educational. You will not be disappointed, because when you leave after the seminar, when you leave from there on July 29th, you will definitely have gained some kind of knowledge that will help you with your taxes. And in that seminar, there are going to be three things will be discussed. One is your tax, second one is your wealth, and the third is your legacy. All these three steps are very important for individuals and business owners, mainly for business owners. And today we're going to highlight all these three topics in a very short format in today's show. But remember, July 29th is the seminar at ITV Gold Auditorium. AJ, I'm sure the preparations must be going on very well for it.
Absolutely, Sanjeev ji. The preparation is going at the war scale. A lot of small business owners from the Oak Tree area, from New Jersey, shows up to this event. This event is highly decorated event for high net worth clients, for small business owners. We have a lot of banks sponsoring this event, a lot of wealth planners, payroll companies sponsoring this event. There is dinner, there are drinks. It's an hour event, hour and a half event, very crisp event, where we talk about three things: your taxes, your wealth, your legacy. As you know, your wealth depends on the savings that you have, not the earnings you have. So a dollar saved is what's creating your wealth, not the dollar earned. We'll talk about taxes, how to save the dollar first, various tax strategies. Then we'll talk about how to build the wealth, how to create wealth. And then we'll talk about, towards the end of the event, how to have this wealth that you created moved to the next generation. How do you create your legacy? It's a full cycle event. A lot of small business owners are going to be there. So please find time, 6:30, July 29th, Wednesday evening. Go to the website to register for the event, or look for the flyers on YouTube, LinkedIn, or various social media.
Very well. Thank you so very much. Let's just give our viewers a little bit of glimpse of what the event is going to be. What the educational seminar is going to be. As I mentioned, there are going to be three things. So let's start with the first thing, which is your taxes. Your taxes begins with income shifting. AJ, so see if you can give us some guidelines on income shifting.
Absolutely, I'm happy to. So when he talks about taxes, we'll be talking about probably 15, 16 tax strategies that are commonly used by the small business owner, by the taxpayers. In this episode, let's quickly touch upon income shifting, tax loss harvesting, as well as charitable giving. So when he talks about income shifting, Sanjeevji, the idea here is how do I legally have the income now but not pay the taxes till the next year. So income shifting tax strategy is more about deferring the taxes as opposed to lowering the taxes. The idea here is if a client is paying me today, how do I not pay the taxes till the end of next year? That's income shifting, and it's legal. It's legally allowed, especially if you have a cash-based business. For example, you can pay the rent from the next one now. You can ask the client to pay a check payable or due on January 1st, which is due now. So there are ways, legal ways to shift the income. And we'll be discussing a lot of those practical examples as how do you shift the income and not pay the taxes for another year, year and a half. The second strategy we'll be talking about is tax loss harvesting. You have investments, you have stocks, you have mutual funds. In some stocks, mutual funds, you are losing money. In some, you are gaining money, you are making money. How do you create a situation when you not pay any taxes by using the losses that you have against the income you have? At the end of the year, you can see where you have lost money, and then you can selectively sell some of those stocks, some of those securities to create a loss in your portfolio so you can use that loss to offset the income. So at the end of December, we'll be talking about very, very practical examples here. At the end of December, you can see what stocks you have income, how much income you will probably end up reporting, and then selectively create the loss in your portfolio. The concept is referred as tax loss harvesting. And the last but not the least for this episode, charitable giving. Please understand, if you have an appreciated stock that has increased in value, when you donate that stock, you get the deduction at the market value. Let's take an example quickly. If you bought a stock for $10, now the value is $100. You donate this stock, the donation is considered as $100, not the 10 that you paid. The best part, you don't pay the capital gain tax in this example. When you're donating the appreciated stock, not only you're getting the donation at the market value, you do not have to pay any capital gain tax on this donation. So it's a double saving. We'll be talking about, again, a lot of practical strategies to save taxes when it comes to the tax section of Sanjeevji.
Okay, all right. That's the first part. And that is your taxes. And those were the 3 points that AJ just explained to us in a brief, and more details will be at the July 29th educational seminar. There's a very famous saying that every tax dollar saved is every dollar available for wealth creation.
Absolutely.
Because the more you save on taxes, the more money you have available for wealth creation, because wealth creation is the key point in your life. So the next section with that note is about your wealth. How do you create your wealth? And they say that, tax savings is a one way to create your own wealth, and the money makes money. So the money that you saved, that money will make money. So AJ, with that note, let's talk about your wealth and cost segregation.
Absolutely. So let's talk about the wealth creation. You have a rental property, I have a rental property. We both get the same rent, but I end up paying less taxes because I know the tools that we can use. Talk about the cost segregation study. So not everything has the same life. If you have an investment property, IRS wants you to depreciate this property on 39 years. But you think the furniture is going to last 39 years, or the loan maintenance is going to last 39 years? If you do the cost segregation study, it helps you appreciate, it helps you increase the depreciation. You can claim the bonus depreciation over and above the cost segregation study. There are a lot of ways to reduce the taxable income, the paper income from your portfolio. So when it comes to wealth building, as Sanjeevji rightly said, a dollar saved in taxes is a dollar available to you to create wealth. We'll be talking about very, very practical wealth building strategies. Not only we'll talk about the depreciation, where we do the cost segregation study, then we can claim the bonus depreciation. We'll talk about the areas where you should be investing. We'll be talking about the qualified opportunity zone. We'll be talking about historical building easement. Lot of great ideas when it comes to wealth building. A lot of these ideas are common sense, but a lot of people don't know about it because they have not seen it, they have not heard about it. So in this event, we have three sections: your taxes, your wealth, and your legacy. First, we'll talk about how to reduce the taxes, several practical strategies to reduce the taxes. Then, now you have saved the taxes. How do you invest this saved dollar to create wealth for your future? That's our wealth preservation, wealth building segment.
All right, that's the second part. So after your taxes, it's your wealth, and these are two of the three topics that AJ is giving us a brief guidelines of it, and again more detail will be at July 29th seminar. We'll continue to remind you, even though we are in the first week of July 2026, and officially now we are into the second half of the year 2026. July 29th is not not that immediately close, but the reason we're reminding you is that you can go to website, register as early as possible to ensure that you will have a seat at this educational seminar, because this kind of seminar by Science CPS Services usually gets a very overwhelmed response from the individuals to be part of that, and we certainly don't want you to miss out. So that's why we're reminding you about July 29th seminar at ITV Gold Auditorium on Oak Tree Road in Edison. Tax savings obviously helps you to save a dollar, and then once you save a dollar, that dollar is available to build a wealth. That is one thing, and then to continue that wealth is also helps you to put money away for the future and retirement and not to worry about it. So one thing is related with the other thing. Taxes, we all have to pay it, but wherever we can save taxes, that saved taxes can really help you with that money to go a long way. So after your taxes, your wealth, now let's talk about your legacy. If you are a business owner, small to mid-sized, or even a large business owner, you need to build a legacy where you want to live, you want to leave your business, your hard work, your establishment for the future generations, or maybe somebody else who is going to come in to buy the business. So we're going to take a short break, and after the break, we're going to talk about your legacy. Until then, stay tuned. We'll be right back after these messages.
Do you know the difference between people who simply earn money and those who build lasting wealth?
It's not luck. It's not income.
And it's certainly not coincidence.
It's strategy.
The good news is, this is exactly what we are going to be talking about on July 29th at 6:30 p.m. at ITV Gold Auditorium.
Your tax, your wealth.
Your legacy. See you there.
Do you know why wealthy families rarely transfer assets directly to their children? Because they use trust to protect their wealth, reduce taxes, and preserve their legacy. Want to know how it works and whether it can benefit your family too? Join us on July 29th at 6:30 p.m. at the ITV Gold Auditorium in Edison, New Jersey. I'll talk about some powerful tax strategies used by successful investors and business owners. This isn't a general seminar. It's designed exclusively for serious investors and business owners. Plus, it's a fantastic opportunity to network with successful entrepreneurs, real estate professionals, and like-minded investors. Join us at our event, Your Tax, Your Wealth, Your Legacy. See you there.
Now let's continue our episode. Earlier, obviously, we discussed about the 3 points which are going to be highlighted at July 29th educational seminar by Science CPS Services at ITV Gold Auditorium on Oak Tree Road in Edison, New Jersey. So first, we talked about your taxes. Second, we talked about your wealth. And now the most important thing, your legacy. Every single business owner, when they work hard and they develop the business, they establish the business, and the business is successful, they want to leave that business to the future generation. In the hands of future generation, they want to have their legacy continues. If future generation is not interested in their business, they will try to find a buyer who will continue that business with the same passion and with the same hard work that the founder of that business started year ago, decade ago, many years ago. And that's why legacy is very important, because you can't be running the business all your life. And that's what the important topic where, Sai CPA Services takes the time out to discuss these important things, so that way you can be prepared. You will hardly find any CPA who will guide you and advise you on these topics. And that's what your legacy is all about. And AJ will give us information on that.
Absolutely, Sanjeevji. So you saved taxes, you saved $1. Now you use this dollar to create wealth. Now you have built the wealth. How do you pass on this wealth to your next generation and not pay any taxes? A lot of people don't realize that there are inheritance taxes, there are estate taxes, there are gift taxes. You have to be careful how much money we are talking about. How do I move this money? How do we pass this money to the next generation without paying taxes? So when we talk about the legacy planning, the tax angle comes back in again. Now we are not building wealth. We are trying to save what we have built, so the government does not take a share out of it when we are trying to give this money to our next generation. And then further, we want to talk about the timing of this whole angle. We will talk about how to save taxes, estate tax, gift tax, inheritance tax when it comes to legacy planning, and then we'll talk about how do we not only minimize the tax, how do we give this asset, this business to the next generation. When do we start it? Do I start it 3 years before I have the plan to exit out? As Sanjeevji rightly said, a lot of time your children do not want your business. So how do you come out of it? A lot of time, a lot of small business owners are all about business. They are the business. When they sell them, their business cannot survive without them. So how do you take yourself out of the business and still make the business survive without you? That's all part of the legacy planning. So very exciting stuff when it comes to the legacy planning, minimizing the gift tax, estate tax, inheritance tax, moving this money, the wealth to the next generation, not pay the taxes, as well as making sure if your next generation is not ready to take it, how do we package it so it can be sold to somebody else?
Okay. So as we covered all these three topics, your taxes, your wealth, and your legacy, as we are going to be inching towards the end of the show, couple of questions for AJ. AJ, in your taxes category, you talked about several things. And my question to you is, when should one consider income shifting?
Well, the idea here is when your income is more than what you want to show on the paper. Let's say if your real income is 200,000, but every year so far you have been showing 100,000. So this year you want to show 110, 120, 125. You don't want to be showing 200. If you are showing 200 on the same revenue, then either you were lying earlier or you are lying now. So in those cases, if you can have some of the expenses pulled from the next year, rent from the next month paid this year, credit card, even though it's not due, it's due on 15th January, but you try to pay it on December 27th. Lot of expenses, lot of investment can be made. If you are doing proper bookkeeping, you can see the picture and try to make certain changes, certain adjustments. Some of the checks, you can call the clients, hey, don't give me the check on December 29th, give it to me on January 2nd. Not deposit those checks even if you have received those checks. Lot of things can be shifted, lot of things can be planned if you know where you stand. Then you can decide how do you want to show on your books. And it's all legal.
It's all legal. Obviously, you wouldn't talk about anything which is not legal.
I remind you, Sanjeevji, everybody in this country is talking about President Trump does not pay taxes. In this event, I tell you, don't ask the question why he's not paying taxes. You are being silly by asking why he's not paying taxes. You live in a country where your president is not paying taxes. I say ask, how is he not paying taxes? Not why. You learn the strategy that wealthy people are using to not pay taxes. This is what this event is all about.
Exactly. And there are a lot of Hows in a sense, how you can reduce your tax liability, how you can minimize your tax liability, where and how you can invest your money so that way your tax liability increases, and how are some of the deductions are available for you, because depending upon your situation, your business, or your tax bracket. So these are the questions of hows are very diligently answered by Sai CPA services, and that's why you should have Sai CPA services to do your taxes, personal taxes or business taxes. Moving on to the show, there are a couple of things that you really talked about. When it comes to taxes, AJ, capital gains is one of the most highlighted things, right? Is every capital gain available for the opportunity zone benefit?
Most are. So unless it's a short-term capital gain, which is taxed at the regular income, most long-term capital gain taxes are available for several strategies. We just highlighted one strategy here, opportunity zone. Last week we talked about QSBS, small business stocks, qualified small business stocks. That's also a tax strategy to save long-term capital gain. There are several strategies that you can use to not pay taxes on the long-term capital gain. So please attend the event. We'll be discussing a lot of great ideas, very, very practical ideas.
All right, and with the capital gains, also depreciation comes in effect also. What exactly is bonus depreciation?
So the government allows you to claim certain depreciation over and above the regular depreciation. Let's say, for example, if you buy an asset and the life is 5 years and you are doing straight line. So not only you can claim 20% of the depreciation, you can claim additional depreciation referred as bonus depreciation. You can claim Section 179 depreciation. You can claim accelerated depreciation. There are a lot of nifty ideas, a lot of great ideas if you know how to spin the story, how to make the story. You can really, really increase this number, enhance the depreciation to reduce your taxable income.
Okay, very interesting. You also touch base upon legacy, which is, I think, a very, very important thing for every business owner should know that, and they should really plan at a certain time, not wait till the last minute, right? So when you do that, and especially estate planning is being done, what is tax minimization in estate planning?
So when you are giving large gift, or when you have the money moving from one generation to another, there are certain taxes. Estate taxes may have to be paid. Gift taxes may have to be paid. There are inheritance taxes that may have to be paid. If you do the proper planning, you can avoid paying all these taxes completely. That's why it's extremely important when it comes to legacy planning to minimize the tax. It's your tax paid money. It's your hard-earned money. When you give it to your own children, you don't want to be paying taxes again. That's why a little bit of planning can go a long way when it comes to the estate planning, estate taxes, legacy planning. I'll remind the viewers, at Sai CPA Services, we are qualified, we are licensed to do business valuation. We are not only will tell you how much is the business worth, in your case, we'll also tell you what you can do before giving it to the next generation or before selling it to enhance the value. We'll help you understand the variables around business valuation so you can make an informed decision.
Okay, thank you so very much. So those were the three topics that were discussed in this episode: your taxes, your wealth, and your legacy. And AJ touched base upon all three of them, three of the topics, and then pointers in each one of them. Now, all the details and more explanation will be available to you at the education seminar on July 29th at ITV Gold Auditorium. It's a beautiful auditorium. It's a theater style sitting and everything else, and you will really, really enjoy, and you will be thankful to Sai CPA Services and perhaps thankful to us for the show, that you will learn something, you will have that knowledge, and that knowledge may help you with the taxes or wealth building or even a legacy planning if you are a business owner. So remember to visit saicpaservices.com, register for the event, be there, and bring in your business partner or friend or spouse. Be there and learn something when it comes to taxes. And this is the right time, because you should be planning your taxes now, for between now and a year end, so you can reduce your tax liability and save money on taxes to use that money to build wealth. About Sai CPA services, so one more thing is that in case if you're in IRS tax audit by any chance, visit Sai CPA services, have them look into it. When it comes to IRS tax audits, they have the highest percentage of satisfaction rate for their clients. They can really tackle the issue and help you out. Do not ignore that IRS tax audit notice. Immediately contact Sai CPA services, one of the rare firms in New Jersey and perhaps in the country where they have the on-hand, efficient, knowledgeable, and trained CPAs, multiple CPAs in their staff, and they will immediately help you out. And that's why Sai CPA services, they do the best in what they do, doing the taxes right. So visit sciencecpaservices.com or give them a call at 908-888-8900. AJ, thank you so very much for your time in being in here. And until we meet again, may you have a tax-free, happy days ahead. Until we meet again, take care of yourself. So long.
Thank you.